There we go.
Today I'm going to talk about mortgage lending and the process. Most people that buy homes or refinance really do not know the process or fully understand mortgage loans. The first thing you need to do is prepare for your future lending. Second thing you would need to do is pick a mortgage company. There are several different types of mortgage companies as banks, credit unions, and also some credit card companies. For example, as Chase or Citibank also do mortgage lending. Finding a home is the other process. To find where you want to be in your price range. And the last part is finalizing your purchase. To prepare for your future lending, you need to build good credit. Everything shows up on your credit report when a bank pulls one. If you're late, how much you owe. So you have to be honest when the loan officer asks you what kind of debts you have. Even if you have unpaid child support will show up. Other things, hospital bills show up on your credit report. And will also show up if you have claimed bankruptcy. And you cannot purchase a home if you've claimed bankruptcy in the last 8 years. You need to save. Most home loans, you have to have a certain percent down. There are other loans, like USDA loans, that you can get up to 102% of the value of your home and your earnest money back. Assets, you have to have proof of assets. Checking accounts, savings accounts, 401k, any investments. One thing most people do wrong is if you're a single person and you're buying a home, if you have a parent or a boyfriend or girlfriend on your account, that is going to cause you more problems than it is going to do good. You will have to come up with 12 months worth of bank statements and prove that your mother or father or whomever is the extra person on your account has not put any money into that account. Debt, again, which shows up on your credit report. You have to be honest with your loan officer. A lot of times that can hurt your chances or could include PMI, which is premium mortgage interest onto your loan. And when you have PMI, it's hard to get it to ever come off. Even when you refinance, it still carries over. Work history, you need to have at least 2 years of good work history. If not, the bank also has to call both places. You have to have W-9s with your taxes, have proof, pay stubs. Picking a mortgage company. You want to shop for rates, but also if you shop too much, it will harm your credit report as well. And once you've decided what type of bank, if you want a corporate bank, a small town bank, a credit union, or a credit card company, you also need to stop and think about if you actually want to contact the same person every time. The larger the company, the less likely you're going to speak to the same person every time. Loan officers, you want to pick a loan officer that is going to help you and keep you informed during your process. Contacting, keeping up-to-date status on how your loan is going. your purchase and where you're going from there. Pre-qualifying is what a lot of people will do before they decide to go out and look for the home that they want to buy. Finding a home. Some of the things that you need to look at, as there are different rules for different mortgage companies. For say, as Freddie and Fannie have different rules, so it is USDA. Things that can harm when you go home searching is when you're in communities, if there's well agreements, septic agreements, private roads. Those are things at the end, if you are not smart when you're shopping, that can end the deal or end up being more costly. To get a well agreement at the last minute, everyone in that subdivision would have to sign agreement, and it usually costs around $200 to record. And that would have to be done before your purchase date. Finalizing a purchase, the steps that the bank has to go through once you have found your home and you've been pre-qualified. First is your early documents. When it goes to this, they have to input everything they guesstimate of what the amount will praise for of the home. They put in what assets you've told them, your work history, your birth date, address, and all your debts. Then they fill out all the early documents and print them off and mail them to you. And at that time, you have to send them back at a reasonable time, because that is what starts the process. In those early documents, you have to sign a waiver to order appraisal, to order title work, to order 4506Ts, which is your income taxes. Because we have to prove that although you send us a copy of your 1040s or 1099s, that you actually sent in your taxes. Your credit report is pulled first. They have to go through, and usually 3 reports are pulled. One is usually our bank pulls Beacon, Finco, and Expedia, and we take the middle number. It also tells us your work history on your credit report. It tells us where your recent addresses have been in the past 10 years, and all credit cards and debts you have opened, closed, paid, or any thing that's still open. Some things that I've seen that's actually killed deals on the credit report is when there's disputes. You have to go out and write each credit card company a letter to withdraw the dispute, or your home is no longer going to be your home. Title work. We have to order your title work. On the title work, it will say what we find and look for is if there's anyone else that's on the deed. If the home has sold to several different people, sometimes the bank forgets to release the deed after it's been purchased. This can cause a headache, can cause up to a month to 2 months to get cleared, depending on the bank and how hard it is to establish things. It will also have any of your well agreements listed from the county, and if there's any liens, mechanic liens against the home. And then after we do all that, we have your appraisal, we have your title work, we have your pay stubs, all your assets and debts we send to underwriting. The underwriters go through more in detail They go through the title work to make sure everything is correct. They go through the appraisal. The appraisal usually takes about 30 days to receive, and if the appraiser has put in information that is incorrect, it takes another 2 weeks to get it fixed. And in your closing is when everything is finalized. When you've purchased a home, you usually will have the title company, your realtor, and your loan officer come in where you finalize all your documents and your home is purchased. And that is the end of my speech.